The next is credit sales, and this is a very important part. I met a gentleman over the weekend, and he's in an interesting line of business because anytime I meet with people, I'm usually very curious. What kind of business do you do? And this is the first time I've ever heard about this business. He sells fishing equipment, fishing materials. In Nigeria, I've never met somebody who is in that line of business. They sell fishing materials, fishing tools, fishing equipment. And we started having the conversation like, is it a big industry? Because most of the fish we eat is imported and it's caught in the oceans. And so if it's imported, who is buying all your? And he's like, that we actually have a big fishing industry for local fish. Right. And then we kept on talking, and I'm like, so I think the industry is there any competition? And he laughed. Oh, there's a lot of competition. It's a very, very competitive space. And then, of course, he told me that his business is about 2 years old or so. And I asked him, so as a newcomer in the industry, how are you able to get customers? He says, my secret is credit. I sell, even though it's risky, but most of my customers are customers I get on credit because credit affects your working capital. Any sales you make and you've not collected money, you've more or less given out your working capital. So many businesses have a policy that they don't give credit to protect themselves, right? Now, if you are that one business that extends credit, all of a sudden, you are providing something, an incentive, a very strong incentive that gives you the opportunity to monopolize that customer. And the way credit works is fantastic. What it means is that the first is that the customer can buy from you without having to bother about whether they have the money now, the cash now. That's the first thing. The resistance to buy is lower because credit makes it easy to buy from you. The second thing is that it gives your customers the opportunity to grow. Many of your customers, if they grow, they will end up doing more business with you, which is logical. As your customers are growing, they will have more needs and they will tend to buy more from you. And many of them cannot grow because they don't have the capital to grow. But by giving them credit, you are giving them access to more products that they can sell without needing the cash to pay you for it. So this is something that has so much value to your customers that the only way they pay you back is to keep coming back because you have a strong incentive. And many times credit doesn't have to be very elaborate. It can be a case of one that I've seen is buy now, take the goods, pay me when you sell. This works really well in fast-moving products, fast-moving consumer goods. If you have a supermarket, if you're a supplier of products and you have clients, you have customers that are supermarkets, what it means is that you give them products. Because these products are fast-moving, they sell and then they pay you. Of course, I know it is risky, right? And it is up to you to manage that risk. But this is an opportunity that comes with its own problem. You will not forgo the opportunity because of the problems, right? So there's that model. Take the product, pay me when you sell. You can't do this for something that takes time to sell, like maybe a car or something. It works really well with fast-moving stuff. The second is, take this now, pay me in 3 days, pay me in 7 days, pay me in 14 days, pay me in 30 days, depending on what works for you, right? And the way some of these things work is that those customers who have been diligent and have been paying next day or 3 days, have been paying well, you can graduate them to 7 days. So the way you assess customers for credit worthiness means you may have to test them first. So if somebody is paying well with a 24-hour credit line, they may also do well with a 3-day credit line, and that way. And what credit sales does is that it creates a strong retention capability for you. This thing I'm saying, the Chinese and the Indians, I believe, have a solid grasp on it. There are many importers of products into West Africa that get containers of their products. They get it on credit from their supplier in China. And the supplier is saying, take this container, I'm giving it to you, pay me back in 30 days. What that does is that you are able to do business with your supplier without having to bring up that much capital. And guess what happens? Anybody who does this for you is somebody who is supporting you when you don't have the capital. What do you think happens when you now grow bigger? You pay with loyalty. You are more loyal to them because they helped you when you were nothing. You are more likely to be loyal. It's a human condition. It's the human nature. So you are more likely to be loyal to them. So credit has a strong pull effect that helps you monopolize your customers and creates a strong incentive for them to keep coming back. It also has a strong element of self-interest because if you buy on credit, and think about this, which is another very powerful benefit of credit. Do you know that you can get away with a higher price? You sell this pen for $10, right? If you buy now, if you pay now, you pay $10. But I can give you this pen on credit and sell it to you at $12. So imagine, credit gives you the ability to improve your margins and set higher prices. And the customer is happy for that because they know, of course, that, and there are ways to rationalize this. As part of the increase in price is you are building in the cost of the risk and the cost of the money you have given them. Don't forget, when you give somebody credit, it's like the person is taking a loan from you. So that extra $2 on top covers the risk and the cost of the capital that you're giving them. Many customers are happy because they're like, I don't have this cash now. This is a product I would never have had access to because I don't have the cash. But now I'm able to get access to that credit and I'm paying through a higher price. Customers are able to. So it has several different benefits, but of course you have to be able to manage the credits. And I'm hoping at some time this year I would have a course on credit management, how to manage credit so that you are able to take advantage of credit sales to make more sales, improve your profit margins, create a monopoly over your customers, and give them a strong incentive to keep coming back, right? If you're interested in learning more about the topics I offer when it comes to starting, building, and growing a business, this is your opportunity to join my community. It's known as the BMG. I provide extensive courses on different topics and challenges that afflict business owners, from how to optimize your profits, how to manage costs, how to boost your sales, how to develop processes, how to scale your business. There's a whole lot that I can teach you. If you want to go deeper into my content, this is your chance. Go to the link on your screen right now, jointhebmg.com.